Hey everyone, welcome back to the channel, your number one source for income-oriented investing. Just wanted to do a quick video today to help you through the volatility which continues. I am filming this on April the 10th. So yesterday was an insane day. Trump announced the tariff pause, 90-day pause for everyone except for China. And the markets just spiked like crazy. Today I woke up on the 10th, everything is down. Now it's starting to go back up. It's absolutely crazy. Volatility could continue, but guess what? I'm a passive, income-oriented investor. And guess what, guys? If I look at the main portfolio here, which is the two TFSAs and joint cash account, which is the majority now, you see that all the dividends have come in for this month, everyone, a little over $20,000. So it's great waking up to see a little over $20,000 balance in your investing account. So in terms of portfolio value, you see the total value here, but just for the main portfolio, it's about 1.318. Now I think things are maybe starting to go back up. So if we just take in this number here, plug it into my portfolio. This is my portfolio. You guys know what I have. You see that, okay, it's a little bit higher than this. You see that I am down just under 19% overall. Of course, this does not include the income, and I'm just about to redeploy my dividends. And normally this is something I share with you. I share only with PII Inner Circle members when I do it live, but I'll tell you what I'm buying this month, and you guys could become a member if ever you want to see what I buy next month and the month after that, the day of. If not, you could always wait for the portfolio unveil video, guys. I'm always going to share with you to everyone all my portfolio moves every single month near the end of the month. So make sure you subscribe to the channel, guys, if you want to follow my journey. And by the way, if you want to follow my portfolio daily on a day-to-day basis, make sure to download Blossom, the Blossom app, and follow me, Adrian_PII. You could actually follow my entire portfolio there. Well, this is only the main portfolio, not the lira, but you know, the plan is, as you all well know, to get rid of the lira anyway and integrate it in the main portfolio. The only thing left in the lira is MSTY. So I will be redeploying that 20,000, guys. My plan is to put 20,000 in HYLD, $5,000. I wish 20,000, but maybe in 20 years, if I'm still alive, maybe I'll get $80,000 a month. Who knows? But 5,000 in HYLD, 5,000 in QQCL, 5,000 in HHIS, and 5,000 in MSTE. I'm making it super simple this month, everyone. Probably going to be doing the same exact thing next month. Why 5,000 in HYLD instead of USCL? Because I'm down on HYLD a lot more than USCL. That's pretty much the reason why. But for me, USCL, HYLD, kind of the same thing. That's my S&P exposure. So 5K going in the S&P, 5K going in NASDAQ 100, 5K going in HHIS, which is 14 stocks here. Lots of tech. And 5,000 in MSTE. The market is down today. Again, this is a perfect time to reinvest. But to me, I'm a passive PII investor, guys. This is always my monthly routine. I get all my dividends. I pay off my bills. I add other income sources as well. I just basically reinvest every single month as much as I can with never selling, never getting out of the market, right? So stay cool, stay calm, do that rinse and repeat, the PII golden monthly routine. And trust me, guys, you will never lose money. So far, everyone, I have not lost a penny. I'm planning on not losing a penny during this volatility. Yes, my portfolio is going to fluctuate on a daily basis, but remember, it's not real until you sell, right? Very important. Stock market volatility is back with US stocks, and in particular the technology sector, taking a beating lately. So one thing that could help weather the storm as income investors is diversification, hence the Global X MSCI EAFE covered call ETF. So in case you didn't know, the MSCI EAFE index is an index that gives you exposure to mid and large cap stocks outside of North America, but developed countries. So things like Europe, Japan, Australia, etc. There's over 700 companies in this index. And of course, like the name says, this is also still a covered call ETF. So you could expect monthly distributions as well. And we know that call writing helps to reduce volatility. So if we look at the holdings, you see the breakdown here, the sector breakdown, not as big as technology as in the US. it's diversified. You have some countries here as well, so you could see Japan, UK, France, etc., etc. So diversification outside of North America could be a good tool to weather the storm. So in case you didn't know, you have the EACC covered call ETF here. You have a leverage version as well. If you don't mind 25% more volatility, just change that C to an L and you actually have a 25% leverage version. So I've been getting quite a lot of questions and comments. How do I get access to European stocks? Well, while still having income, well, the MSCI EAFE index is a really simple, easy way to get it. Instant diversification, and they do covered calls as well for you. And in case you didn't know, just a reminder that they also have EQCC. If you're an income investor, this invests in multiple indexes to give you access all around the world. You see the breakdown here. So you have about 20% in Canada, 47% in the United States, and 33% in the rest of the world. And that ETF that we just discussed makes up about 26% of this ETF. So in case you wanted really the whole world, and the same thing, you just change the C to an L and you have a 25% leverage version if you're comfortable with that. So thanks again to Global X Canada for sponsoring this video. So I just want to end with a few reminders, guys. This is just a quick little video, keep you motivated, show you what I'm doing. Again, if you want to follow my moves, become an Inner Circle member, click the little join button to get a review of all the perks. And next month, I'm actually going to be unveiling my parents' portfolios again for Inner Circle members. So that's a great bonus content for members. I know you guys really like my family members' portfolio unveils. And by the way, same plan. They're not selling anything. My parents are retirees. My grandparents are super retirees. 100% in stocks. Rinse and repeat. Reinvest as much as we can and grow the income month after month. And this is why I'm a passive income investor. This is the biggest advantage of PII, if you ask me. You never actually have to sell anything. This makes you give you the ability to stay 100% in stocks, right? The idea is basically replacing your paycheck, becoming financially independent, and living off of the income, paying your bills with it, reinvesting the rest. And again, guys, I know this is an expression that's being used a lot. When in doubt, zoom out. If you look at the 5-year history of the S&P 500, a 5-year chart, it's definitely not as scary, right? Everyone's portfolio is down now, including mine. You see here, right? I'm at 1.373. Last portfolio in Villa was at 1.5, I think, 5 something. Before that, I was at 1.6. So I have an unrealized, I'm actually down like $300,000 or something like that. I don't care because maybe next month Trump's going to announce something else and it'll just go back up. But the real reason I don't care, and the real reason I think I don't care about stock prices and stock prices are stupid. Think about it, guys. Apple stock has fluctuated such a huge amount in a matter of 4 days. You think that within a 4-day period, the Apple Corporation is worth 15% lower, and then one day it's worth 15% higher? It makes no sense. This is why I don't look at stock prices. Stock prices are stupid. It's just based on emotion. So this is where PII shines, because you're not dependent on stock prices. That's the key that I've been trying to tell everyone. You're not as dependent on stock prices than a growth investor. Growth investor, which is a great way to invest, that invests in index funds, for example, they don't make money with yield, right? The S&P 500 has maybe 1.3, 1.4% yield. Even the Canadian market, if you buy it, only has about 3% yield. You're going to have to make your money at one point by selling. You have to sell. PII investor, they never have to sell, right? The growth investor as a retiree have the drawdown problem. The PII investor as a retiree does not have the drawdown problem, right? So covered call ETFs, reminder everyone, it's a fantastic way to always be able to stay in the market, in stocks, in the stock market, even as a retiree. Dave Ramsey seems to agree with me. Another video on that soon. This is a question many retirees are asking themselves, especially now during this volatility. Can retirees, people who are not working anymore and are dependent on their 401ks and their RSPs and et cetera, can they stay 100% in stocks? because normal financial planning, financial advice, conventional wisdom says no, you should de-escalate or de-risk your portfolio as you get older. I think that's complete nonsense, but I'll explain why and go over that in an upcoming video. So give me a thumbs up, guys. Just wanted to make a quick video for you today. Again, I'm filming this on April 10th. I'm going to go now, stop this video and reinvest everything. What are you guys going to do? Let me know. Hopefully you're doing the same thing and we're capitalizing on these cheap prices. So stay tuned for the next full portfolio unveil, so you see where that 20K went, and you see my new prices for HYLD, QQCL, HHIS, and MST. And yeah, stay tuned. Thanks a lot, guys. See you next time.